If I wasn't using both sides of my brain,
Yeah.
it just wasn't going to be interesting to me.
A lot of brand founders don't really know who their end customer is.
If you don't think making money is important, no harm, no foul. We're going to agree to disagree.
Attention is the new currency, and
100%.
and content is how you earn it.
Unlike prior generations where artists, built their credibility behind the curtain at runway shows and, earning their credibility in that direction. Mario is kind of representative of the newer generation of artists. Certain execs, senior execs at Sephora were saying, we think he represents kind of the next generation of artistry. And I was like, that's exactly how we're thinking about it. Okay, confirmation.
Hi, this is Julian Reis. Welcome back to On the Record. Today we have Anthony Choe, the founder and CEO of Provenance Digital. I'm so excited to have Anthony here today. He's a very long friend of mine. He's been investing in the consumer space, and I highly regard him as one of the best investors in this field. Anthony, great to have you here.
It's great to be here. I'm excited.
I'm so excited. Anthony, you and I have been long friends since I first moved to LA, my first tour of LA. Mm-hmm. And, I'm very excited to have you here to, talk to you about, your career and what you've been doing. I think when I first came to LA, you were one of the first people I met, if you remember.
Yeah, I remember very distinctly.
I think it's a great story because, when I first met you, I first rolled into your office and I met you and, you put me through the ringer. I was at the time raising money for Skin Laundry. Mm-hmm. And, I walked away thinking, wow, this guy asked me so many questions. And I was like leaving the room and I was like, you know what? This guy's really smart. And that evening, I was like, you know what? I need to go and, unwind. And I went down to a bar and I was like, you know what? I'm going to go grab a beer. And I bumped into this guy wearing a hoodie. And do you know who that guy was?
Yeah, that was me. There's daytime Anthony and there's nighttime Anthony.
Yeah, and nighttime Anthony, we connected. And I remember us leaving each other at 3 a.m. and ever since we've been very close friends. So I really appreciate our friendship.
Yeah, me too. And it's been exciting for me to watch all the awesome things you've been doing since Skin Laundry. So,
and it's changed. So listen, I thought today we start with, your journey, because I think what you've done and how you think about building and investing is something so incredible. Why become an investor and why enter into this space?
If I go really far back, it starts with my dad. So my dad was a lifelong entrepreneur, buying businesses, turning them around, selling them, wash, rinse, repeat. By the time I got to high school, I was old enough to know that it can't be as easy as it looks. So since he didn't have time for a lot of hobbies, all of our dinner time conversations were on business. Mm-hmm. So I remember in high school asking him, okay, Dad, I got 2 questions for you. One, how do you know you can, run a business better than somebody who ran it before, even if you've had no experience in the industry before? Mm-hmm. That's number 1. Number 2, how do you push your chips all in when you're trying to feed a family?
Yep.
So he said, oh, interesting questions. He's like, your first question, the answer is it's about good management. And he said, the second part of your question is about risk. And that was the more interesting one where he said, the way I look at it, I came into the world with nothing and I'm going to leave with nothing. So I view everything in between to be upside. Yep. So if you've done your homework, why wouldn't you do it? So it really changed my perspective on everything when I said, gosh, that makes all the sense in the world. So everything I've done since then has kind of become a quest for what is this good management thing, yep, and taking the risk alongside entrepreneurs, yep, and being a part of that entrepreneurial journey. So I started my career in finance in New York City right out of college. I never wanted to be a financier. I always wanted to be close to that entrepreneurial journey. And so investing in consumer brands is the way I get to do that. So that's how I got into it. In terms of focusing specifically on consumer, that was a long journey too, over the course of 5, 10, 20, now close to 30 years, where I just became more and more increasingly focused on consumer and consumer brands in particular. And for me, it's just always been fun because I think for consumer brands, you have to understand a brand both from an emotional perspective, but also a logical perspective. And if I wasn't using both sides of my brain, it just wasn't going to be interesting.
So there's, Provenance Digital, which is your firm, which you've started how many years ago now? Is that
8 years ago.
8 years. I think what has always enlightened me to what you've done is you've created a vehicle to really express the way you want to invest. There's not a firm out there quite like yours, in my opinion. Tell us a little bit about like why you think you're different and how your approach. I think the way that you invest from a philosophy point of view and how you partner with different investors, different companies. I'm always like excited to see when you announce an investment because it takes a while for me to triangulate.
Right.
Because there's a method behind the madness always, and I think it will be really exciting to talk about that.
Gosh, I think the idea for Provenance started around 10 years ago. Just watching how consumer brands were evolving. What everyone was talking about back then was, everything's digital first, D2C. This is a new thing. To me, digital wasn't a new thing. But what I felt like was happening was how brands relate to the end consumer was changing, and digital was a part of that. So the bigger hypothesis was, this is the way we simplify how we talk about it, is the hypothesis was brands have a tribe, not a TAM. So you have a unique psychographic profile of certain types of customers that will lean into your brand and not others. And that's your real market, not the overall size of the market. So when we launched Provenance, before launching, I spent about 6 months stitching together a bunch of the data tools we use today to try to really identify that tribe and see if that was true. And within the first couple of years, we absolutely validated that by the time a brand gets to about 10 million in revenue, there's a unique psychographic profile that brand will have for the types of customers it's going to appeal to, all the way, until 250 million plus a revenue. So validating that hypothesis was a really important thing for us, because then we could say, well, with that information, now we can give very specific guidance to our brands rather than generic guidance. Specific guidance on all the different channels they're going to go to, what their brand really stands for, et cetera. And that was really important to me, going back to my father's imprint on me about what is this good management thing. I always wanted to be able to provide the best advice I could to the companies, and not just generic advice.
Because when you work with a brand, it's a courting process. There's infinite money out there, as we all know, and finding the right partner. And I think when you lead in, you're introducing more information to the brand founder that they probably don't necessarily know. A lot of brand founders don't really know who their end customer is. And I know one of your famous questions is, tell us about your customer. And often you'll come back and give them the data and say, well, actually your customer's this. I always curious, like, when you come back with a playbook and you have a playbook to your brand founders, how receptive are they to, take that advice? Or are many of them like very dogmatic and they say, no, this is my customer and I need to, follow through here? How do you think about that?
Yeah, I'd say well over 90% of the time, we're showing brand founders what they probably directionally knew already, but with just with greater specificity.
Got it.
There are times though where, we've had conversations with brand founders where we're philosophically just opposed. Where, I've had some conversations with people in the past, maybe not so recently, but in the past where they've said, all that analysis is great, but we're just going to grow as fast as we can. We don't think profit is important. I said, okay. If you don't think making money is important, no harm, no foul. Exactly. We're going to agree to disagree. You do you, and we'll find other founders that align with how we think a brand should grow healthily.
I think that was our first conversation. I remember that. No, but I think more importantly, when you're looking at a brand, and brand, excites both of us. I think, it's amazing when you find a brand that we're both excited about, and everyone, you can latch and hold on to. There's this concept of having a hero product. And I'm always interested to see like how, as an investor, when you think about, you see this company that's killed it with this one mascara or this one drink or this one, CPG product. There's a lot of risk when you're investing in a company, and that's got all its eggs in this one basket.
Sure.
At what time and how do you think about when you invest, and how important it is to understand that hero product concept?
That is a very insightful question. So we actually have this built into our investment principles, where we say every brand begins with a great hero product, but everything the brand becomes is a function of what it does after that initial hero product. So just to make a distinction, we're a growth stage investor. And so that's kind of in between, early stage venture investing and more mature traditional private equity. We like to capture the conversations with brands when they're in that growth phase, where they're starting to expand beyond that initial hero. And life gets complex because that's when channel complexity starts to happen, what your optimal assortment of products should be, all those things. You have to start making really tough choices that you haven't had to face before. We call it the awkward adolescent phase of a brand, where you kind of know what the DNA is going to produce, but it's not a fully formed adult yet. Just like in real life, the choices you make during that time,
that's such a great term,
have a profound impact on what you're going to be as an adult. So it's that time where we're using the data that we capture to say, this is probably what makes sense for you as a brand, and this probably doesn't, whether it's channel selection, changes in brand positioning, any pricing considerations that you've got. All those things go into evolving beyond that initial hero product.
Do you have an example of a brand that you've invested in that has started off in that hero product phase? It could be with demographics or end consumer that's changed over time.
Sure. I guess the most recent one that we've got is a company called Everyday Dose. It's a better for you coffee business. It's got nootropics, collagen.
This is the mushroom-based one?
Yes. Yes. So it was interesting. When we showed some of our analytics, we unleashed some AI on their customer reviews. And what popped up was the biggest words that showed up in the word cloud that we created were love, taste, and coffee. And the word mushroom barely showed up.
That's so interesting.
What we were saying was, you're the first product in this category where people fall in love with you primarily for the taste, but they know it's better for you in all these different ways.
And is there caffeine in the product?
There is. There's the original hero has a lighter amount of caffeine, so about the same that you would get in a Diet Coke, approximately. But what they found was about 50% of the population has caffeine sensitivity due to a gene, and then 50% doesn't. But there were a lot of customers who loved the flavor profile and just said, can you make it with full caffeine? So a very obvious next product was what they introduced. So they're going to go to Target in the second half of this year.
Amazing.
It's not just the original hero. So
you essentially doubled the tribe almost.
Yeah. But the types of consumers that lean into the brand will be the same, but we're just addressing need states slightly differently.
I mean, it reminds me when I grew up in Asia. Growing up there, no one drank coffee. It was only a tea culture. And then when Starbucks entered the market, there are, you change consumer behavior for good, and now everyone drinks coffee. Coffee is everywhere, and it's one of the largest QSR opportunities there. I think it's really interesting when we're looking at these adjacencies to traditional markets, and how you guys are finding these new types of products that fit in, and new use cases. We talk a lot about how the younger generation are now no longer drinking alcohol and going to alcohol-free products. And that's something that, and when we grew up, that's all we did was drink beer. And
that's right.
But taste change, behaviors change, and I think that's what's so interesting about consumer investing. I think one of the hardest things I found, building businesses is, when I speak to an investor, and I love the term the adolescent phase, because, the second you step out of that comfort zone and you're making product number 2, that's when the instability, you're not a one-trick wonder anymore. You have to prove yourself out time and time again.
Yep.
And I think when, as a founder, as an entrepreneur, the first questions the investors usually get to is like, how much money are you looking to raise? What are you going to do with it? Use of proceeds, how much dilution? And, you've done this so many times. And I think often the founders themselves really don't know what to ask for because they don't know what it entails. How do you think about that? And that, when you speak to a founder and you're excited about the opportunity, that's when the real work happens.
Sure. Part of the work we do is not just on analyzing the tribe, it's also analyzing their behavior. So usually at the time we're investing, the company is starting to inflect. It's got strong growth still, but you can tell it's starting to inflect into profitability if it hasn't done so already. But there's not enough profitability yet, usually, because you're still reinvesting a lot in growth to value the company off of just the profitability. So we spend a lot of time looking at those unit economics. Those unit economics drive how much capital you should need over the long run. So we do all that modeling out of that on our own. And what we try to come up with is what we think the best answer is for the company on how much you should raise.
So you put yourself into the founder's shoes.
Yeah, because we're trying to say you have to, toe this fine line between not too much and not too little. Because if you have too much, then you feel this pressure to earn a return on that extra capital, and it's dilutive to you as a founder. But if you raise too little, then you haven't really solved your problem of being able to focus on the business. So we try to find that right sweet spot, and that right sweet spot is better for everyone. It's better for the founder because it's the optimal amount where you're not over diluting yourself. And it's also better for us because it just means it's a better return on our capital.
Yeah, absolutely. I mean, when you think about return on capital, I think, typically when someone invests or in a type of fund yourself, can you talk to us a little bit about your duration and kind of what you're underwriting and how you think about that? Because I think from an LP point of view, I think it's like a bit of a taboo topic. No one really talks about that openly. So.
Sure. Well, it's not taboo for me. I like to talk about it pretty directly with our investors. So the way we underwrite is to say, look, if we need to make a 3x plus multiple of our money on average. So that's what we think the right risk premium is for our stage of investing. But we don't just price it based off of one outcome of that. We like to look at scenarios where we say, if a lot of things go right, then it also should be able to make us a 5x plus kind of outcome. But also, if a lot of things go wrong, then ideally we'd like to be able to get our money back. And so we think about things in a range of outcomes between those scenarios. And typically what I like to tell my LPs is, we're looking for that usually under a 6-year time frame. And the reason why it's 6 years, whereas most people in the industry look at it over a 5-year time frame, what nobody will admit is years 4 and 5 of anybody's projection model is just garbage.
It's bullshit.
It's just a bunch of assumptions. Like, it's fun with numbers. So we kind of look at it as you have a first 3-year plan, and then when you're halfway in at halftime, then you build the next 3-year plan on the back of that.
I mean, one of the things I've been incredibly impressed is like you've been able to take businesses between the 40 to $100 million range, probably more closer to the 40, up to the 200 plus. And I think that's a certain skill set that you have. And I think to really be able to do that, you really need to understand where your tribe is and to really lean into those omni-channel strategies that get you there. So I think that's very remarkable. One of the questions I have unrelated is that, investing has been relatively easy from the 90s when interest rates were at 8% and they all went down to 0. And, the big pension funds were like putting a lot into alternative investments such as what you guys do. We've been in this very, very volatile macro environment for the last, couple of years now.
Sure.
After COVID and now interest rates have gone up a lot.
Mm-hmm.
How does that affect you as an investor? Because, do hurdle rates change? Like how multiple expansion used to be a big story about investing, and, investing at 5 times EBITDA and selling at 15 times EBITDA. Things have changed now.
Yes. That's a very astute observation. So how we underwrite doesn't really change.
Mm-hmm.
It's still that ideally 3x plus on our money within the range of outcomes that we talked about. Because frankly, I think that's the way entrepreneurs think as well.
Mm-hmm.
I don't think entrepreneurs are calculating the IRR on their money.
Yeah.
And IRR is what most private equity firms are going to look at. So we like to align our objectives with what we think entrepreneurs care about as well, which is multiples of your money and how do you multiply creating value. How valuations have changed over the last 5, 10, 15 years, it's been pretty wild.
Yeah.
I'd say we've seen every guardrail over the last 5 years in particular. From businesses being wildly overvalued, and now I'd argue that in many cases they're sort of undervalued because there's just this irrational fear in the marketplace that shouldn't be there but is, for whether it's tariffs or whatever. So yeah, we try to model our outcomes to not have everything go right. What's considered a normal outcome?
Yeah.
Not this guardrail or that guardrail, and go from there. That bar is moving a little bit real time though, as we speak.
I mean, I think everyone's become a self-regulating investor, and I can't remember a time when, it's important to understand political inputs into our investment decisions, but no consumer brand that, has supply chain and, in markets in Asia now can go into a conversation without understanding that fully.
That's right.
I want to pivot a little bit and talk a little bit about storytelling.
Okay.
So storytelling, I think, is so interesting. And I think what's so interesting about storytelling these days is that the platforms in which we do storytell on have changed so dramatically. I want to understand how you think about storytelling in this day and age, because things have changed, and I think a lot of brand founders out there are still trying to figure it out.
Yep.
Not to say there's a right or wrong answer, but I'd love to hear what you think about how storytelling is, especially in the brands that you love to invest in.
Yeah, for sure. Well, first of all, I'm going to congratulate you for being on the forefront of that change and helping brands understand how that storytelling has evolved. And I think the big elephant in the room is TikTok. TikTok has changed how storytelling happens, how algorithms are driven. Now, even Meta's algorithm is driven by interest in the content, just like TikTok's was. So in many ways, everything has shifted in that direction. It's a really challenging time for brand founders because I saw a survey recently that said over 80% of consumers expect their brands to be highly authentic, but 75% of consumers also expect the brands to be entertaining.
Oh my gosh.
So how do you do both? And how are you on point while being culturally relevant while true to yourself? It's not a total contradiction, but you have to balance both. This is where we come back to really truly knowing what the brand is, who the audience is, and what it stands for. Because if you don't know that, then you're going to chase your tail, trying a bunch of tactics and tricks that may not be authentic to your brand. And that's probably going to turn people off more than it's going to turn people on. So even more so, we think it's really key to understand today who you are as a brand should not change. How you go to market should always be evolving because even in the last 2 to 3 years, how brands need to go to market has evolved quite a bit.
Incredible.
Even wholesalers, how they think about what brands they want to merchandise into their stores, whether it's Ulta and Sephora, or Target and Walmart, even that's changed. But all of it is coming back to the same principles, which which we think are driving all this, is that people want a greater selection of brands in the same category.
Yeah.
And if you really pull back, this is the real foundation of our hypothesis, is that, we're a mature industrial economy now. So consumers have infinite choice, and the brands they want to select are not just based on price value. That's table stakes. You have to offer that. But really, it's the top of Maslow's hierarchy of needs, which is self-actualization. Now, that's a loaded term, but to us, it just means people want to buy from brands that are a reflection of themselves and their values. And that's kind of what our analytics are designed to enlighten is, well, who are your customers and their values? And when you see that with clarity, that reflects back to you on what your brand actually stands for in there.
And what you're pushing out there in the world.
That's right.
It's really interesting, that statistic you said, that, they demand you to be authentic and entertaining. It's like, I want to marry you and I want you to be able to do this and do that. And you're like, okay, it's a marriage. But I also think, like, now that we're seeing this world of TikTok, that, you go around the room and you ask how many people are watching CNN to, understand what's going on in the news today. Very few are watching it. That's why there's been such a transition away from traditional media to new media. And if you look at YouTube and TikTok, their monthly active users over close to 500 million. Whereas on Amazon, it's about 150 million monthly active users on Prime. So the users are consuming the content, all different aspects on these channels now, and they're doom scrolling and looking for the first 3 seconds of attention. And I always say, attention is the new currency, and 100%, and content is how you earn it. So when you first meet with a brand, you're right. I think a lot of brand founders chasing the football around the schoolyard and trying to try everything, because it's frustrating when you see conversion rates across traditional, other platforms start to go down in conversion, and then everyone's pointing their finger at the CMO like you're doing a bad job. That's not true. It's like things are changing. When platforms change, that's when the biggest opportunities occur. And I think we've seen that across streaming platforms as well. With this change, and brands starting to, pivot and figure things out, what's the most important thing that you look in characteristics in a brand, like whether it's margin profile, so they can be in it for the long game to weather these changes and storms?
Yeah. With all the change, you're 100% right. CMOs are dealing with a lot. I'd say probably half our portfolio saw platform changes on Meta in the first couple months of the year, where clearly something had changed, and they were adjusting rapidly to it in the spring. So I don't think that part ever changes. What we believe is what will never change are 3 principles that we always look for across any brand in any category over any period of time. One is, what is the durable differentiation that the brand has? That can happen in a lot of ways, but it has to have something that makes it stand apart from the rest of the field.
Like, can you give an example of that? Like, is it a product differentiation or is this a brand differentiation?
Yeah. So I'll use a recent example, Makeup by Mario. So lots of people ask the question, like, is it an influencer brand or is it an artistry brand? And what we had to ultimately distill down was it's an artistry brand where Mario just happens to be famous. And unlike prior generations where artists, built their credibility behind the curtain at runway shows and, earning their credibility in that direction, Mario is kind of representative of the newer generation of artists that are kind of building their craft in front of the camera. And so we said, he just happens to be famous, but his techniques, his credibility, training an entire generation of other artists around his craft, that's what really built the authenticity, not that he just happened to have a large follower count. So to us, that's a a more durable kind of
Yeah.
differentiation when it's built around that kind of 20 years of expertise and education
Yeah.
and credibility.
I mean, he himself is the distribution channel. And that's what I think has changed a lot in the creator economy today, is that you have these creators, they're not just influencers, they are your distribution channel. So,
That's right.
you know, Makeup by Mario, he produces a behind the scenes shoot. It's reclipped by all his fan base who are sharing it on their channels on TikTok. And then people will start to follow and then, you know, do that rabbit hole where they find out where this content came from.
Yeah. And so it was really validating when we were doing our due diligence and, you know, certain execs, senior execs at Sephora were saying, you know, we think he represents kind of the next generation of artistry. And I was like, that's exactly how we're thinking about it. Okay, confirmation.
I'm investing.
And going back to your original hero product question, you know, we had never seen anything quite like it, where I think when we first started looking at the business, I think he had 8 top 3 in category sellers at Sephora, like almost right out of the gates. Yeah. And we had never seen anything like that. Yeah. That's differentiation. There's lots of different ways that brands differentiate. And we think each one of our portfolio companies does something very unique that its competitors don't. So that's one. The second one is we always want to build a growth plan off of solid unit economics. And because that's the way we think you can have durable both revenue growth and profit, because it's not one or the other that you're choosing. Eventually, when you grow out of that adolescent phase, you have to be able to do both. And without the right unit economics, it's very tough to get there. And then the third one is really around the investment structure and valuation and other things. It's, does it allow us to make that 3x plus return, maybe a 5x and good outcomes, and protecting our money in the downside.
Have you ever like broken any of those rules?
No, not to our knowledge.
I've got short-term amnesia. I think those are really important ones because I think, you know, margin profile, you know, it allows you to live another day. You know, a lot of young entrepreneurs, you know, who are starting new businesses have this thought that, you know, all the money's gone. It's impossible to raise money. What do you think about people who think that way? And, you know, when you think about giving advice to entrepreneurs who are about to go into one of these fields, let's just talk beauty as a category, because I think beauty is very topical at the moment, just because, you know, we've gone through a period of, you know, very, very high growth, lots of M&A activity. And then we've gone through a low period where there's been less activity. And only yesterday we heard about, you know, the infamous Rhode acquisition by e.l.f. Cosmetics. I'm really curious to think about where you think we are in this cycle. And the second part of my question is, you know, for someone who's getting into this, who's graduating or who's been in the beauty industry for a number of years and wants to start a beauty brand, like what would you tell them?
Multiple questions in there, so I'll try to address them each. The first one is, it's tougher to raise money now. Absolutely. That is 100% the case. But what I would say is the prior 5 years, or, you know, from 2020 to 2022, I'd say that was the aberration, not the rule. It wasn't supposed to be easy to raise money. If you're a founder telling a story in consumer, it's almost always been hard because you have to be really differentiated. You can't be a Me Too product. So I'd say we're just reverting back to normal on that level. From a valuation perspective, and it's not just related to beauty, what I'd say is in every category, people are getting valued off of their profitability first and growth second, rather than the other way around, which again, to me is just a reversion back to the normal state of things, not the aberration state of things. So with our advice to founders is, yes, it may feel tough relative to where we've been, but it's kind of just going back to the way it always has been. So if your assumption is you want to be a founder because you think it's an easy way to make a quick buck, probably not a good assumption.
Going back to your dad's advice.
So, and we always like to say, look, great brands are, you know, often built over the course of, you know, a decade plus, not 2 years. And so don't be in a rush to get to the outcome. If you believe in what you're doing and you do have that durable differentiation and the solid unit economic foundation to build off of, then you don't have to be in a rush.
Mm-hmm.
It was never supposed to be a rush.
So Anthony, so with the acquisition of Rhode, I think the sticker price that everyone saw was the $1 billion mark, and 800 million in upfront and 200 million in an earnout.
Mm-hmm.
Obviously, I don't know Rhode as a brand more than what I see, and they obviously are in different channels than the traditional beauty channel.
Yep.
What's your when you glance over what they've done in such a short period of time?
Yeah, I mean it's truly incredible because they still have a pretty limited product assortment.
How many is 10 products?
I think it's 10 products, which is
That's insane
to generate north of 200 million on 10 products. It's pretty incredible. So more so than the price of Rhode itself, the impact, at least as of this morning, on e.l.f. stock price.
I haven't seen.
It had popped high enough that their valuation had gone up by 2x the price that they paid. So, because I think people could see that it was highly accretive.
Yeah.
So I think it was a win-win on both sides. Wow. Where, Rhode, for all they've accomplished in the short period of time they've had to do it, like $1 billion outcome is absolutely incredible, and congrats to them. I think it's still probably going to be a very reasonable multiple of cash flow. So it's not something that's, a bubble-like valuation, I don't think. And, e.l.f. probably still sees all the potential that's still left ahead with assortment growth,
and channel
Sephora.
growth. Yeah. I think it just entered Sephora too. So there's a lot of room to grow there as well. It's very, very, very rarely do you see a brand that big without having big distribution.
Yeah, it's truly an incredible story. So kudos to them.
Yeah.
But those are the kinds of deals you want to see get done, where it's a win-win.
Yeah, I want to see Makeup by Mario at $5 billion.
Where pigs get fat and hogs get slaughtered.
Yeah, exactly.
Is what I like to say. So.
Excellent. A lot of these brands who have gone and been sold to strategics over the last decade, there's hundreds of examples. I'm always curious to hear about the founder that goes along with the brand into the new strategic buyer is entering a new journey because they're obviously going to take the brand to a whole new level, maybe geographic expansion or into new channels. When you talk about durability of a brand, I think that's a question mark that a lot of people ask. When a brand, how long can a brand sustain? How do you think about that? Is there a time horizon that you think is reasonable, or do you think that, because I think being realistic as a strategic buyer as well, they that goes back to what is the core of the product that can stand the test of time?
I think the real question that's hard for anyone to answer right now is, how many brands stay relevant across multiple generations?
That's right.
So have they been around for 50 years and are as relevant as they used to be? Very, very few brands in any category ever stand that test of time. So
except Hermes.
There's certain European heritage luxury brands that are built on that foundation of old world storytelling and the authenticity of the quality that comes from that. Those are very durable, but it's hard to create a next generation.
Exactly.
So the rough justice rule I like to think about is, if brands used to be generationally relevant for 30 years, it's probably somewhere between 15 to 20 now. And that 15 to 20 rule just applies because when we see the brand's tribe in detail, we can see that usually there is a major generation, whether it's millennials, Gen X, Gen Z, whatever it is, that they're strongly appealing to. Not always, but if that's the case, then rough justice generations are between 15 to 20 years long in how people define it.
I think that's so important because no one's ever given me a straight answer like that. And I think understanding the tribe and looking at who is the end, or the fan, because if the fan can live for that 15 to 20 years and you have that those cohorts which are continually introducing themselves to that brand, That's what's exciting. Because I think also like, a lot of the big strategics, when they take over a brand, they don't understand the tribe. They don't have that level of detail that you do. And I think more and more people need to understand that when they do the analysis, so they can say, oh, that's the aha moment. I can take it from, a 200 million revenue business to a $1 billion revenue business, not over 2 years, but maybe over 15 years, and sign up for that journey.
Yeah, this is actually another big part of our thesis is, we're playing generational relevance and what brands are relevant today that we think strategics need. So if you look at the portfolio of most strategics, their brand portfolios were typically built catering to prior generations.
That's right.
And when prior generations age out, what most people aren't aware of is once your customer base gets to 65 years old, discretionary spending falls off a cliff at that point. And so strategics always need to keep a healthy age distribution because if they don't, they're going to be in real trouble. And our whole view is every strategic needs to buy themselves generational relevance because that's the way they buy themselves a future.
Yeah, exactly.
Trying to reinvent an old brand catering to younger clientele, it can be done, but it's extraordinarily difficult to do that.
It's almost like it's very difficult to change a platform when it's already been built. I always say like Instagram was never built for e-commerce and, they've tried and tried, but it failed. So they've really found it was a discovery channel to connect with your social circle. One of the things I'm curious about, is the different, like when you say relevance for these portfolios, I think things have changed. Like the way that we think about different categories, particularly health and wellness. There's, in beauty, there's so many different categories. And I think that there's a recent phenomenon in the US about how people are willing to think about their own internal health.
Yes.
I would love to hear about what your thoughts are about that category.
It's fascinating. So health and wellness has probably surpassed beauty in the last 12 months as our most active area of looking at new investments. Most fascinating data I've seen recently is two things. One is how people use AI. Health and wellness last year was number 75 on the list. It's catapulted to number 10. So that's number one. Number two, I think as a result of that, people's trust in the FDA is also falling at an extraordinary rapid clip where 18 months ago, 65% of people trusted the FDA. It's now down to about 50%.
Oh, why?
Because the FDA moves really slowly. People know that there's conflicts of interest on what health guidance is issued. And the access to information now about health optimization is now in the consumer's hands. You don't need the doctor or the FDA as the gatekeeper to that health knowledge anymore. So consumers are taking that into their own hands, and we're seeing it come to life in so many different ways. Whether it's like everyday dose is one of those, but we're seeing so many different ways that it's coming to life. We don't see this as a fad. We see this as a fundamental change in consumer behavior. Of you just can't wait for the health system to catch up to the real data that's out there. So people are just saying, "I'll access my own data and I'll make my own decisions."
So, two questions. One. I'm really curious about, when you see AI and what people are using it for. That's one, particularly the consumer. And two is that, with all this data that we have about our own bodies now, like how much we're sleeping, the glucose levels, there's so much data and we have to interpret that and what that means for each one of us and, better for you products that we end up consuming because that's what we think, whether they work or not. Curious about those, one on AI, like why people use it from a consumer point of view and what you think about that. And two is like how this is shaping how the consumer is, investing their own time in products.
Well, this is also a derivative of the same Harvard Business Review article that I saw. The number 1, 2, and 3 use cases of AI are startling. Number 1 is now therapy and companionship.
That's so crazy.
Number 2 is optimizing my life. And number 3 is finding purpose. So
Wow.
when I look at how people are using AI 1, 2, and 3, it's like it's a replacement for my therapist / spouse. Number 2, it's my life coach. And number 3, it's something resembling God.
It's incredible.
Like, or spirituality or seeking. So I never thought that would be the way we're using it. But to me, that's a signal of this is where people are looking for
Answers.
Yeah. And this goes back to being fundamentally human. These are all fundamentally human things,
It's
not
so funny
technology
because
things.
technology has pulled us all the way, the pendulum to one end. And now what you're telling me is people are using this for answers because they don't feel human anymore.
Yes. So I kind of joke about it. It's like we're using AI to solve the problem of culture and technology moving so fast due to AI.
Yeah.
So AI is the solution to the own problem that it's creating.
Yeah.
But I feel very comforted in knowing that regardless of how much technology change is happening, we still want to feel more human.
Yeah. Yeah.
And if technology can help us access our humanity better, that means to me the primacy of brands and the roles that brands can play in any one of those areas, whether it's health and wellness or optimizing your life or kind of being your friend or giving you tips that way.
Yeah.
You know, seeking purpose in life, I'm not sure that a brand should tell you how to seek purpose. That's when it starts to feel a little bit like a cult.
Or ChatGPT. If we all have the same view of what's purpose in life, we're going to become robots, right? So
it's one thing to say, hey, we're all part of the same tribe. When you're trying to convince somebody of how they should live their life, that feels a little bit tricky.
Yeah, that does feel a little stretched. And I mean, the signal I get from that as well is like, you know, we've all become vessels to 10 times more information or 1,000 times more information. And if people are asking for therapy, you know, maybe it is a signal of, could be depression as well, because people are getting too much information. It's information overload. You know, on the same tangent of AI, like how are you seeing like brands adapt to AI? Because traditionally a consumer products brand starts with this great founder who has this great idea about a product, has authenticity and can be entertaining, and you know is now being thrown into this world of AI where everyone's looking at things in real time. How do you see the brand founders you meet with today use it, and how does it excite you as an investor?
Our logical brains are only wired to process information at 10 bits per second, which is incredibly slow for all the information that we're being thrown. Yeah. So your point about information overload is spot on. Our emotional brain processes at 1 billion bits per second. Mm-hmm. So I think what's happening because of whether it's messaging overload, information, content, whatever you want to call it, we're starting to process everything emotional first, logical brain a distant second. So number one, what's resulting is there is, I think 2/3 of Americans now don't trust the news anymore because they don't have enough time to actually process with their logical brain all the information, all the facts that are being thrown at them because it's just so much. Yeah. So we're forced to be more emotional beings as a result. And one of the things that we see happening across the brand landscape is there's a little bit of a reversion of the pendulum back towards things happening in real life again. Mm-hmm. You can't do things in real life as frequently as you can on TikTok or other mediums. Yep. So none of that stuff is going away, but people are supplementing things with in real life events and engaging with humans in real life. So all of our companies are doing that in one way, shape, or form because I think there's this longing for humans to have real engagement that way.
Absolutely.
That supplements all the things that they're seeing digitally.
I mean, I think that's one of the big trends that I'm excited about is that, AI and the efficiency that it brings to everyone is that it gives people more time outside. I'm hoping that that's a trend that
100%
for our children. I think it's something that I was at Stagecoach and, seeing how these events evolve, it's just incredible because people are longing to have that connectivity. I also think that, we should really, really promote it if we can, especially with brands, activations. You want to touch the product. You want to speak to the founder, and you can do that these days.
Yeah.
I also believe that, we've kind of lost touch of that as well, like the human interaction. That's why I think for us as a company, we want everyone to be in the office, spending time,
100%.
looking at each other in the eyes and seeing like the fear of God if we're making the wrong decision and reacting off that. And I think, it helps you build strong culture and strong teams. And we've lost that over the COVID. When you're building a team at Provenance Digital, I know many of your team members who are amazing. How do you think that AI has changed your organization? And, it's not like you're going to have to ask people or anything. I'm really curious, like how you think about, using in your own business.
Yeah. So I'd say we're on the beginnings of that change.
Yeah.
We're going to apply some machine learning techniques to to advance the ball on some of the analytics we already do. It's not going to change answers, but it's just going to
help validate the quicker.
It'll just make things more. Things will just happen faster, I think, because machines can just do things faster. So
it gives us more time for lunch together.
Yeah, that's exactly right. So there are some pieces of the research that we're going to further automate as well, that go beyond what we're already doing today. But my ultimate goal that I told the team is we want to be able to 3x the amount of deal flow that we're looking at without sacrificing any quality of the work that we're doing. And, by only adding maybe 30% to the staff. So it's going to be able to do more faster and efficiently. The decision making, we're still going to make the decisions.
Absolutely.
Because there's a human component to what we do. Brands, by definition, have an emotional impact on the end customer. And if you're not using those human signals, you're going to miss a lot.
Absolutely.
It's just automating all the rest. So to me, I just say, look, the two things, our team, I'm very fortunate to have the team I do because everyone's super passionate about the brand landscape. So I just say, look, this is going to allow us to do more of what we love, which is talk to more interesting companies and help the companies that are already in our portfolio. Those are the two things that we love doing. And we just have more time to do those things.
I think what you said is really important because when I think about my own team and I think about the creativity aspect of it, I think that's the one thing I never ever want to lose hold of
100%.
Control of. It's the creativity. It's the stuff that we spitball in the rooms. We talk about ideas, about brands, about founders, and these are it's the tip of the spear where we sit when we talk about the creativity. And I think living in Los Angeles, I never thought would be ever into this whole creative economy with the entertainment, but it really has become like such paramount importance to understand the creativity that we share with our founders and come up with these ideas. Everything else we can use AI and help us, operate better. One of the things that we do is we use AI to help think about who are the best, TikTok affiliates to help sell products. And it's not because they can have the most followers. It's because, they stitch content better. They make better quality content. They sell more products. They have a nice tone, how they speak. And AI can pick up on these little signals much more efficient than, the human eye. So there's things that we can do, but ultimately I think it's really important to decide where we use it as a company.
100%. Because those folks that you partner with have to come across as being authentic as well. They have to be authentic and entertaining, just like brands do.
I know. We have to become more entertaining.
We're all trying.
We're all trying.
We need to know, did you invest in the skin laundry?
No, he didn't.
It was too small for us at the time, but I was fascinated by it. I was super. Julian thinks I was criticizing it, but no, I was super fascinated. I was like, "This is different."
I remember it quite vividly. So when I went into the boardroom, I remember I thought, everyone in LA, they wear, James Purse t-shirts, jeans, and Converse shoes. So guess what? That's what I wore into the meeting room. And I would come in there and you're in there wearing a suit and a tie. and I remember this was when Dry Bar was just starting, and that's where I thought, you know what, I'm going to follow Dry Bar and, you know, and try and mimic a little bit about their pricing strategy.
Yep.
I think what I learned in that meeting was that not one size fits all. And I didn't understand who my tribe was. And I was trying to introduce a new procedure and product that the market did not know anything about yet. So we were still trying to figure out that data. The concept with Skin Laundry was to come up with a single-use, single-product service, which was laser facial. And when I came up with the idea, I tried to figure out what price I should charge per session.
Right.
And at the time, Dry Bar was doing a full blowout for $50.
Yep.
And I was like, that's the cost per service, and that's what we should charge. Little did I know that blow drying your hair and having a laser facial are very different products. And I thought about it, and you know, at first people distrusted the brand because it said, "Why is it so cheap?"
Yep.
And it took time for me to learn that, you know, the pricing of a medical laser facial was inelastic, and I could increase the pricing substantially.
Yep.
So when I priced the business, to your point, the margin profile was very thin and very tight. Whereas today, the margin profile is much higher.
Yep.
And we charge, you know, $200 for a treatment. So I wish I knew that back then when I first came to see you.
Well, the reason why I was so intrigued, your insight was a good one, which is, you know, in many ways in skincare, consumers in Asia are way more advanced already than the U.S. consumer is.
That's right.
And being able to bring certain, you know, techniques from Asia to the U.S., I thought that was brilliant, and I never heard of like the treatments that Skin Laundry was doing. And that's why I was asking so many questions, because to me, I was just wondering, like, well, what works in Asia doesn't always translate to the US. So what are the pieces that I think might translate well, which are the pieces that might be tricky?
I know, it's funny because today we have just around 70 locations.
Amazing.
In the Middle East and London and Asia and the US. Well, Anthony, this has been amazing. I really enjoyed our conversation today. I like to finish our conversation with something a little different. Sure. As I told you, I asked you to bring a record, which is something special to you, and we exchange at the end. So I got you a record today, which is one of my favorites.
Oh, it's an amazing one.
Miseducation of Lauryn Hill.
An amazing one.
Both you and I started our careers in New York City.
Yeah.
You know, I'm not going to say what happened then, but it was definitely reminds me of New York. So this is for you.
Thank you. Oh my gosh, this is an all-time classic. Absolutely an all-time classic. I wish her career was longer.
I know. Well, she's coming back. I mean, she's you know like a brand. You know, she's still here.
Yeah, 100%. So thank you. I will cherish this.
You're welcome,
I really
buddy.
appreciate it, Jude.
Thank you for tuning into the show. We look forward to seeing what you write in the comments, and excited for you to join us for the next episode. Please subscribe and follow wherever you watch the podcast.